Good morning, and here are your top 5 stocks to watch out for in today's trading session. Well, let's begin then with Exide Industries. That stock is in the limelight today as the battery maker has said that they plan to increase their stake in the joint venture with the Swiss firm Leclanche to about 80.15%, with a further investment of about 33.17 crores by way of subscription to equity shares of the joint venture. Remember, it was in June 2018 that Exide Industries had announced signing the pact with Leclanche SA for setting up a joint venture company, and they plan to build lithium-ion batteries to provide energy storage systems for India's vehicle market. So now Exide Industries has further invested an amount which aggregates to about 33.17 crore rupees by way of subscription of the equity share capital of its subsidiary. And with this above investment, the stake of EIL in JVC, which is the joint venture company, stands at about 77.87% to about 80.15% of the total paid up capital to meet their funding requirements, particularly for their capital expenditure projects for JVC. Getting a move on then, focusing on Ingersoll Rand as well. That company is looking to sell up to 14.25 lakh shares. This represents up to close to 4.52% of the total issued and paid up equity share capital of the company. This is the offer size on the 24th of November. The OFS is for about 1.43 million shares by the founder. The floor price for this OFS is placed at 578.6 rupees per share. Keep an eye out on L&T as well. Remember, we've been talking about how the company has been on an order winning spree of late. They have managed to bag a number of orders, and that has taken the aggregate order book to about 42,300 crore rupees in Q3 already, which is very commendable. A lot of brokerages have been giving this a big thumbs up. The latest is CLSA. They maintain a buy rating on the stock with a target price at 1,400 rupees, saying that L&T is focused on large prospects, capital allocation and ESG. And the large prospect base will be seen in the second half. They believe that the government capex is driving orders, and this is also helping to drive their margins and working capital, and the management is focused on ROE. Watch out for Voltas. Morgan Stanley maintains an overweight rating with a target price at 844 rupees a share, saying window AC is 100% locally sourced from OEMs, and that the company is exploring the possibility of in-house component manufacturing. China's import defense dependence is now likely to come down significantly, and they see market share gains of nearly 200 basis points over FY21 year to date. And BPCL, an important candidate to watch out for, is now Apollo has global management has submitted their EOI for the government's 53% stake in the company, according to the Economic Times, which underscores the growing interest for Wall Street buyout group for big ticket deals in India. Aion Capital with ICICI Venture, which is recently the platform that had been dissolved. In fact, we understand that they are likely to partner with a global energy major for the final offer, and the potential bidders have 45 days to submit the EOI. Apollo has dedicated natural resources investment franchise worth about $5 billion of assets under management, owning oil and gas assets predominantly in America.